Hey, I'm Jusko from ProudMoney.com, and in this video we are going to look at the Self-Credit Builder Loan, formerly known as the Self-Lender Credit Builder Loan. But before we do that, I'm going to ask you to please subscribe to this YouTube channel right here if you have not already. And if you have already, I thank you for doing so. So it's been 3 years plus since we kind of had more an in-depth look at the Self-Credit Builder Loan. It used to be known as Self-Lender. Self dropped the lender part, I think, because they want to offer more financial products going forward under the Self brand. But anyway, in this video, we are going to look at what the Self-Credit Builder Loan is, how it works, what it is going to cost you, and if this is worth it as a way to try to build your credit score. So the goal of the Self-Credit Builder Loan obviously is to help you build credit, build your credit history, increase your credit score. In my opinion, this is something that it makes more sense to look at if you are someone that has a bad credit history than if you are someone that is new to credit, because it is kind of expensive. If you're someone that has a bad credit history and you're finding it difficult to get credit, whether that's a credit card, even if it's a secured credit card, well then maybe this makes sense for you. If you are someone that is newer to credit, I think you could find other options out there on the market without having to go this route and pay sort of the fees and interest that are rolled up in this. But if you have bad credit and you're really having trouble elsewhere, this could make some sense as a way to build credit, because it does seem to do the job in terms of raising your credit score. So the mechanism to build your credit is this. You are essentially buying a CD, a certificate of deposit, that has a sort of set face value, and you are paying for it with a fixed monthly payment each month over a set period of time. And every time you pay for it, you make an on-time payment toward the goal of buying that CD. You are having those payments reported to the major credit bureaus, TransUnion, Experian, and Equifax. And so you are helping to build your credit by showing those on-time payments on your credit report. Now, since the CD does not actually come into your hands when you first open up this Self-Credit Builder account, you actually have some forced savings here as well, because you're not going to actually get that CD until the end, when you have completely paid off the complete loan. So the hook here is those payments being reported to the major credit bureaus. That is what you are paying for, because when you actually get a credit builder loan through Self, when you get to the end, yes, you're going to get that CD, and you could make the case that this is sort of forced savings, but you will have paid a significant amount more over the course of those payments than the face value of that CD. How much more will you pay? Well, that depends on which loan you choose, but let's look at a couple of examples so you can see how this plays out, how these things are structured. So in the first example, you have a certificate of deposit, a CD, with a value of $520. The terms of the loan say that you are going to pay $25 per month over 24 months, and all of those payments that you make, assuming they are on time, are going to be reported to the credit bureaus, and that can help you build your credit. Now, if you don't make your payments, that can hurt your credit, so we should throw that in there too. But anyway, $25 per month for 24 months. There also is a $9 administrative fee when you first start your loan, which doesn't seem to have any particular purpose other than to charge you an extra $9. But anyway, $25 per month for 24 months. If you do the multiplication there, you will find out that that is $600, and then you also have that $9 fee. So you have paid $609, and in the end, you will get a CD worth $520. So you've paid an extra $89 on top of the face value of that CD. And remember, you didn't get the CD up front. It's not like they gave you $520 and you paid for it. They keep the CD in reserve, and then you get that after you have finished the terms of the loan. But you have had all of those on-time payments, assuming they were on time, reported to the credit bureaus, and that is really what you're paying for here. Another example that Self shows on their site, a $724 CD that you would pay $35 per month for over a 24-month period. At the end of that period, you would have paid $840 in those monthly payments. You'd have that $9 admin fee, so you would have paid $849 to get a CD worth $724. And then there are other options as well. Some of them go for 24 months, some go for 12 months, some are more than what we just talked about in terms of the size of the loan. Now, there doesn't seem to be any correlation necessarily with the size of the loan you take out and what it might do for your credit score. Even Self on their website says that that is the case, that they don't have any definitive proof that taking out a bigger loan and paying more on top of that loan is going to be any better for you than taking out one of these smaller loans like the first one that I just talked about. So that is how it works. So now let's give some answers to common questions about the Self Credit Builder loans. Number one, does it have a hard pull? Is it going to be a new inquiry on your credit report? No, it is a soft pull. However, once you actually have opened the loan, you are going to have a new account on your credit report, so that part could ding your credit score in the short term, but in the long term, the goal is that your credit score will go up. But you're not going to have a hard pull on the front end, so you're not going to have that hard credit check. So is this a credit account or is this an installment loan? The answer is it is an installment loan. So the way it is going to get reported on your credit report is as an installment loan. And installment loans are handled sort of differently in the calculation of your credit score than credit cards are. So you should definitely know that. Now, a common question about loans like this, and really any installment loan, is what about credit utilization? When I first take out that loan, aren't I really using 100% of my credit? Isn't that a 100% credit utilization because I haven't paid anything off yet? Well, that's really not how it works. The way credit cards are handled and the way installment loans are handled on your credit report and in your credit scoring are two different things. In terms of credit cards and other revolving debt, you are being given a credit line, and so none of it is used at the beginning. So if you run it up to the top of that credit line, that means you have used 100% of a sort of free line that was open to you. That looks bad because it means you went out and started buying stuff immediately when you got that new credit line. With an installment loan, by definition, you are using the whole loan at the beginning because whatever the terms are, you have purchased something that has a certain value and has a certain cost, and you've agreed to pay it back. So in terms of installment loans, yeah, you're at the beginning, and so being at the end is better than at the beginning in terms of paying it off, but it's not going to hurt you in the same way that it hurts you when you get a credit card and you run it all the way up. So over time, as you make your payments, that's going to help you because that utilization on the installment loan is going to go down, but they are sort of walled off in terms of how credit scores work. So having a high utilization on a loan doesn't really hurt you unless you have missed payments. If you take out a Self Credit Builder loan and go to look for it on your credit report, you will not see it as Self. You will see it as being a secured installment loan from one of 3 banks that are the partner banks that actually offer these loans through Self. And those are either Lead Bank, Sunrises Bank, or Atlantic Capital Bank. And then the biggest question of all is, how much is this going to impact your credit score? How many points are you going to get on your credit score? Well, that's going to depend on where you're coming from, what other credit you have, how you're doing with that credit. So if you have very low credit, say you are under 600, you're probably going to see more impact on your credit score, assuming you make all your payments on time, than someone that has a score that is 700 or above. In fact, if you're at 700 or above, I would probably say that it doesn't make a whole lot of sense to get a loan like this. If you're in between there, somewhere between 600 and 700, well, it's maybe not going to have as much of an impact as someone with a really bad credit score, but it could still have an impact on you. So there are various reports out there in terms of what people have seen. Some people have said they've had 40 points. Some people have said they've had 70 points from one of these. So if you are trying to sort of, bounce from a very low score to a score that is in the middle, or maybe even getting you more toward the higher end of the credit spectrum, well, then perhaps this could make a difference. If you have other installment loans, if you have car loans, or if you have a mortgage and you've been doing well with those, it might have less of an impact because of the fact that you already have installment loans as part of the mix on your credit report. If you don't have any installment loans, maybe it's going to make more of an impact. So it's going to be a little bit different for everyone. But again, some people saying 40, some people saying as much as 70, and maybe there are things on either side of those numbers as well. So that is how the Self-Credit Builder loan works, and I'll give you a little bit more of an opinion on it in just a second. But I also want to mention the Self-Credit Builder Visa, which has come out within the last year or so. So this is sort of an offshoot product for people that have gotten the Self-Credit Builder loan. And where the Self-Credit Builder loan is an installment loan, the Self-Credit Builder Visa is a credit card. So it is like a revolving account. And so when it's on your credit report, I assume it is going to be a little different. You're going to have a revolving credit card on there as opposed to the installment loan. But you have to have the installment loan, you have to have the credit builder loan first before you would potentially get the Self Visa. So the way that works is it is a secured credit card, which means normally you would have to put a security deposit down in order to get it. But in this case, because you have the credit builder loan, the money that you have or the money that you have paid into the credit builder loan can act as that security deposit. So as long as you have made payments of at least $100 and you have 3 monthly payments that have been paid on time, that is when they kind of start to look at your account, and then they will offer you potentially this secured Visa from Self, and you can decide whether you want to have it, and then you can decide what credit line you want to have attached to it based on how much you have paid in already on your Self-Credit Builder loan. So it is an okay way to build credit as well. It can help you because of the fact that it is different from an installment loan, having that revolving credit card. It does have a $25 annual fee on it. I don't know that I would get the credit builder loan in order to, make my way over to that Self-Credit Builder Visa, but it is another potentially nice way to get something from getting that credit loan in the first place. So that is the story with the Self-Credit Builder loan and its offshoot, the Self-Credit Builder Visa. Now, when I look at these as a way to build credit, I think it's only okay. And I say that because while it does seem to help your credit score, at least in other people's experiences, it is expensive. So looking at those examples we just talked about, you have 17% or more that you are paying on top of the value of the CD that you are going to get. So essentially you are paying more money to get less money in order to have those on-time payments reported to the credit bureaus, and it's really not all that great of a deal. If you can get a better deal somewhere else, you should probably take that before this. However, if you have bad credit and it is difficult to get a better deal somewhere else, I can see why you would do this. Or maybe you are someone that wants an installment loan on your credit report because you've never had a car loan or you've never had a mortgage or whatever, and you think that would help your credit. Maybe this would make some sense, but again, it is expensive. So if you have bad credit and this is kind of your best option, I could see why you would do it. If you are new to credit, I think there are other things out on the market that you would look at. First, there are credit cards that you could probably get your hands on that are unsecured, maybe not great in terms of rewards or whatever, but they are better kind of than starting here. Or there are secured cards out there if you had trouble establishing credit for the first time. But the market today is a little more friendly to people that are new to credit than it used to be, while the market for people with bad credit is pretty much the same. You are going to have to work harder. So sometimes these are the kinds of things that you have to do in order to get credit. So with all that said, I don't have any issue with Self as a company. I think they're above board in terms of what they are offering and what is going to cost you. Things seem fairly transparent. I don't think they are trying to fool anyone in terms of what you are getting here. It is an expensive way to build credit, but it appears to be an effective way to build up your credit. So if you don't have better options, I can see why you would go here. If you do have better options, I would say probably take those first. So that is it for this video. If you have experience with Self, I'd love to hear that in the comments below, or if you have questions and comments, I'd love to hear those down there as well. Otherwise, thank you for watching, and as always, please go to proudmoney.com, where we do credit card reviews and we talk personal finance and we talk deals and all sorts of other fun stuff too. Thanks for watching. Bye.